People think that banks are the safest places to keep money. But did you know that banks make money every time you spend, save, or borrow money? Because the financial system is so complicated, banks do some strange things that you may not know and understand. We're not saying banks are bad, but there are a lot of things that banks are hiding from all of us. Welcome to Money Talk, where we discuss tips on making money. And for this video, we are going to tell you 5 money truths that the banks don't tell you. Some of these facts you might already know, but there are some that will really surprise you. But before we begin, don't forget to hit that like button, hit subscribe, and click that notification bell to receive updates and be the first to check out our latest videos. Keeping your money in a bank is not the best option. How much interest do you get on your savings if you put them in a bank? It seems like it would have to be at least a few percent to make sense. But it's not even close. Some of the best banks give only less than 0.5% interest. Some banks have higher rates, but are still less than 1%. This won't help since inflation rates are rising, so you end up losing money. With inflation going up like it is now, for example, the prices of assets like homes and stocks rise rapidly, as we have seen over the last year or so. Also, a bank is not a place to make money, but to store it. It will not grow much if you keep it in your account. Credit cards can be debt traps. Your credit debt is not the same as your home loan. While home loans are at 3.5% a year, credit card debts are like 20%, which is a huge difference. Sadly, a lot of people are trapped in this debt because they find it difficult to pay for it. Most people admitted that they had credit card debt for at least a year, and most will keep it for many years. Most people spend money without thinking about how they can pay it back, and banks take advantage of this. Also, if you use your credit card abroad, many banks will impose a variety of penalties and charges. This is how banks make a lot of money, you know. But hey, don't get me wrong. Using credit cards responsibly is a great way to build your credit score, but don't fall for it if you're not good with money. Borrowing from banks can help you make money. You might wonder why someone with billions of dollars would go into debt when they can easily pay it off. The correct answer is that it's free money. It might be weird, I know. I mean, who in their right mind would give you money for free if you already have $1 billion? All of it comes down to interest rates. Banks offer such a low return on investment that it's not worth keeping your money there. But for this, it's the other way around. For example, let's say you borrow $1 million at a rate of 1.05%. Before the pandemic, the average rate of return on a savings account was 2.4%. Even if you put that $1 million in another bank, you will still make $24,000 a year and only have to pay back the bank that lent you the $10,500 each month. Think about what you could do with $100 million or $1 billion. In the US, the inflation rate is between 2.5 and 3%. So any money you borrow that is less than this rate is like getting money for free. This is all based on the timing and the economy. And since we're on the topic of borrowing, if you were to be lent $1 million, how or where would you spend it and why? Share with us your thoughts in the comments section. And while you're there, feel free to subscribe to our channel to get updates. Now, let's get back to the video. Banks have the ability to create money out of thin air. You probably think that only the Federal Reserve can make money, but actually, banks can do it too. With how the banking system works, every bank in the country or even the world can make a certain amount of money depending on how much people have put in that bank. For example, you put $1,000 in the bank. If they kept it, they wouldn't even be able to pay you that little 0.5% interest. So, they lend it to someone and get much higher interest than what they give you. The average interest rate on a credit card is 20%. Also, the bank won't tell you to whom it will loan money. When you check your account, the bank will show you that your money is there, and you can take it out whenever you want. In order to lend money to someone else, banks have what is called fractional reserve. For every $1,000 you put in the bank makes another $900 out of thin air and lends it to someone else, bringing the total to $1,900. The richer you are, the lower the rate you get. Banks and businesses are the same. They aim to make as much money as possible, and if their business model doesn't make money, the company or the bank will not stay afloat. This is why they are much more likely to lend money to a rich person than to someone poor. For example, the bank doesn't have to worry about a billionaire not paying back their loan. They can easily sell part of their business to pay the mortgage if something goes wrong. Compared to a typical worker who could get sick, might not be able to work, or could lose his job. This is a big difference. Would you feel comfortable lending money to a friend who barely makes any money, or to a friend that earns a lot? So, if you want a lower interest rate on your mortgage, a lower rate on your credit card, or just better terms when you borrow money, you need to do better financially. A low mortgage rate is also a way for banks to get close to wealthy people, so that when they need a bigger loan, they will come to them. It works out well for everyone. Henry Ford once said, "It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." Whether you're spending or saving money, banks deploy a variety of tactics to gain as much money as possible from you. We are not saying that banks are bad, but that is just how they work, and you won't be able to do anything about that. That is why it is best to be strategic, especially during these times when money is tough and the cost of living is going higher. Instead of hiding your money, thinking it will be safe, you need to learn how to invest. The money you place in the bank will not grow on its own, so you need to use this money and make the most out of it. If you enjoyed this video, make sure to hit that thumbs up button, click subscribe, and hit the notification bell to receive updates on our latest videos. Also, feel free to leave us a comment. If you want to watch more videos, head on over to our channel to see more from Money Talk. See you!